right, let's now talk about passive investing. And I don't need to tell you what this is about because passive investing in India came of age a while back. The point is, how far can it go right now and where does it fit in your portfolio? Joining me on this conversation to talk about the trends that are currently visible is Prateek Oswal, the Chief of Passive Business at Motilal Oswal. Prateek, thanks so much, as always, for taking the time. Let me start with a bit of a different take this time. Let me start with a rapid fire. And let me ask you a few questions, just 3 or 4. The first one is, one misconception about passive investing that you wish investors would drop?
It's for beginners.
Okay. Which excites you more, ETF adoption or smart beta curiosity?
ETF adoption.
If passive is a new active, what becomes the new niche?
Quant, maybe.
Okay, all right. So that is not necessarily an indication of anything to come by, because I want to talk to you about the report that you've just launched. And one of the takeaways is that 76% of mutual fund investors are now aware of passive, and nearly 68% have invested in one. What, according to you, has caused this change? It's not something that happened overnight, Prateek, but more distributors are willing to sell this. Is this what you're witnessing?
Yeah, so there has been a major. So there's two things. One is India itself has started investing in a very big way. Just to give some numbers, we had about 4 crore demat accounts in 2020. Today we have over 20 crore. So I think the number of investors have really sort of gone up tremendously in the last 5 years' time, combined with the awareness of index funds, ETFs. So I think the awareness has gone up tremendously. Just to give you some more numbers, in 2020, there were only 5 lakh investors who were invested in index funds. Today it's 1.4 crore. So that's a pretty significant number, close to 80 to 100% growth year on year. And also the AUMs have also grown 100%, I would say CAGR. So I would say, awareness has grown significantly for index funds, ETFs. There are a lot more products out there. AMCs are launching a lot more passive funds. And also what we've seen is that, the markets, at least the Indian markets today are becoming a lot more efficient, just like the US markets, so finding funds that give you alpha, especially in the mid and large cap space, is becoming quite hard. So a lot of investors are looking at passive funds now for that sort of an allocation because they're seeing that returns are pretty much as well and they don't have to worry about performance.
Prateek, do you think that's a sign of what we've seen over the last 5 years? Because at the start of this year, calendar year, you had a drawdown in the broader markets to the extent of 20%, but then you did see a reclaiming of that quite quickly, and as a result of which a lot of active fund managers missed the bus. They had allocations that they couldn't change very dramatically because they were geared for a prolonged pause or a further decline. And so if you look at the last 1 year performance, or you look at the last 3 year performance, it is colored by that underperformance of active. So do you think that the tendency to go to passive, and what you just mentioned, the fact that it's becoming harder in certain pockets, in more pockets, to beat the benchmark, do you think that this is just based on what we've seen so far?
No, actually not at all. So the data is quite consistent. It's not on the basis of what's happened the last 1 year. In fact, if you look at data 1 year back, maybe 2 years back or 3 years back, you'll see similar trends. I think if you look at the large cap space, if you study the large cap space over the last 5 to 6 years' time, there has been about 70 to 80% underperformance in terms of number of funds to the benchmark. And I think the guys who are outperforming also keep changing every year. So essentially, and actually, what's really interesting is something which, also takes me by surprise. But if you look at the large cap sort of component of India, component of the mutual fund space, so the large cap component is about 65% of India's market cap. And about 65% of that is passive today.
Wow.
So if you look at the large cap space, most of it is in passive money today. So there has been a significant shift. In fact, incrementally, a lot of the money that going to large caps tends to happen to passive funds. Obviously, this is driven by a lot of institutional flows, but this is just a general trend that we see. What we see even in mid caps today, it's following a similar trend where I think it is getting harder to beat the mid caps. So people are watching it. But my view is very different from this. I personally, or we at Motilal, think that performance is not the real reason. The real reason is more to do with asset allocation. I think people have realized that you should have some of your money in passive. The allocation of passive used to be like 0% 4 5 years back. Today, most people tend to think of it like, what, I should have maybe 20 25% of my portfolio in passive. Maybe the rest can be in active funds. So I think that has been the major change where people are now adding passives to their asset allocation. And that's been driving the change that you see.
Yeah, so there is also increasing participation from non-metro cities, Prateek. It's something that I found quite interesting in your report. What do you think is driving that? Because ultimately, you talk about passive, and it's something that has been a conversation traditionally in certain circles, but we've moved beyond that.
Yeah, so non-metros is, I would say, more to do with low base effect more than anything else. I think, historically, most of the flows from passives tend to only come from metros. And I think now you're seeing some growth happening in non-metros as well. So we track this data on a monthly basis, and we're seeing that the numbers are extremely small. Somewhat similar to what we saw in metros 5 years back is what's happening in non-metros today. So I think it's more to do with low base, but yes, I think the awareness is growing significantly. Also, you have to understand that in India, more and more, most of the incremental investors who are coming into India today are coming in through direct platforms. They're not coming through distributors or through industries. So I think those guys, tend to like passive funds a lot more. So I think, and also the newer age of investors are coming in from non-metros. So I think the non-metro money is coming in mostly from the new investors who are coming into the markets through these online platforms, and that's where the numbers are coming from. But if you look at the AUM numbers, they're still not that large.
Yeah, just to close things out, Prateek, you mentioned that there is a substantial share now in the large cap category for passives, but I'm just wondering, you were one of the first fund houses to have a broader gauge or a broader gauge availability for an index fund or a passive option, right? I'm just wondering whether it makes sense, because you look at certain time periods and very clearly something like a Nifty 500 has beaten several active funds, and there's no reason now. The companies are also, the vintage is more, the size of these companies is much larger than they used to be. So the first 500 are no longer as skewed to the top as they were before. They are, but not as much as before. Do you think that there's more of a case to invest in these broader gauges?
Yeah, I think, so I almost think that it's not smart to invest in Nifty 50 or a Sensex fund today. Honestly, they are not representative of the Indian stock market anymore. They used to be representative of the Indian stock market maybe 10, 15, 20 years back, but not anymore. They are, when you invest in Nifty 50, you're investing in essentially a fund that invests 60% in the top 10 stocks. It's not really, it's more of a sort of mega cap sort of an index. We believe that India has really substantially changed in the last 5 years. When we launched a small cap index fund, an average size of a small cap company was like 3.5, 4,000 crores market cap. Today it's like 25,000 crore market cap. So these are large companies. These are trading like mid caps. So we believe that the best way to own passive, and if you look at the philosophy of passive, the philosophy of passive is buying the market. And when you're buying a Nifty 500 or a broader based index, you are essentially buying 80, 90% of the market. So we believe that broader is the way to go. And I believe that if you're looking at being philosophically true to investing in index funds, I think broader base is a much better way to go than, say, like a Nifty 50 or a Sensex, where you're essentially betting on the top 10 stocks.
We've come a long way from even the conversations, Prateek, you and I have had in 2016, 17 or thereabouts, if I remember correctly. In the last 8 years, we've come a very long way. So I'm guessing that the next few years will be exciting for the passive space and the mutual fund industry as well. Thanks so much, as always, for taking the time.
Thanks so much for having me.
All right, well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Do stay tuned. This is NDTV Profit.